Is it time to buy? That's the question I'm looking to answer in today's video. It's certainly a good time to start to accumulate a position, but where are the levels at which you want to quote unquote move all in? That's what I'm looking to answer with the levels we take a look at today inside of the S&P and the Qs. Both are in very interesting key territories. Now it's about pinpointing the exact price level. Let's start the conversation with the S&P 500 first. Here's the swing that I think we're tracking. This is the 2022 high and the 2022 swing low. Based off of that, we have our Fib extensions, and we've tagged the 200% almost perfectly before now pulling back. Now this pullback, if we were to add in our 100%, aka breakout level, that would give us an area right near where price is currently pulling back to, about the 480 price mark. 480 seems to be a really strong support level, at least as of right now. Levels that we have beneath us involve 440 up to about 420, which also gives you near the halfway swing of this mark. That would take you to about the halfway point of 2022. Now that certainly feels like a steeper drop, but with the way that we've seen some of these gap downs, that doesn't feel impossible anymore. So these levels down here, near 440 to about 420 inside of the S&P 500, feel like better, safer areas. We have 3 open gaps here, and I think those 3 open gaps getting filled would be a better place to quote-unquote go all in. Now that's not to say that this current level isn't where I think we're about to see a shorter term bounce. I believe that at least, and I've strongly started accumulating a position up near this 100% retracement level. Now inside of the Qs, we're following something similar. The Qs have breached their gap level as well, which is 407.59. If I come into the daily time frame, this is an open gap, and with Monday's open, when we dipped slightly below that price level, we dipped below 407.59, but it doesn't feel like that's the last time we're going to touch this level. Beneath us, we also have 2 levels near the 380 mark, and I think building up that position right near 380 is a slightly better zone inside of the Qs. So as we keep dipping down here and perhaps making even lower lows, I'm looking to continue to keep adding to this overall position. Now with our intraday volatility, what's been very interesting is we've had days like today where our daily models are completely squished, and when things like this happen, you need to switch to the hourly models. That helps you put a little bit more into perspective, and even then, it's certain hours that are tradable, and a lot of hours we just see that volatility very quickly accelerate after hitting T1. So I think avoiding some of the hours in which we know we should be avoiding anyways, the lunchtime hour has been helpful in this volatility. And outside of that, zooming out and having a bigger picture view of these levels where you're happy, or at least I'm happy to be accumulating, has helped really avoid a lot of the fear that I think might be mongering in the markets right now. I hope you found this video helpful. For those of you looking to try and make some sense, figure out some key levels, especially if you have a little bit more of the same bias that I do. Take care, everyone. Good luck trading, and I'll see you in our next update.